Let's bring in KKM Financial's Jeff Kilburg. He's also a CNBC contributor. And Kilburg, how do you read the tea leaves here?
Well, Kelly, I think we just go back to 2025. Remember the month of April, that volatility that we saw where the VIX flew over 60. Here we are today with the VIX. Yes, it's up 25%, but it's still in the teens. And it's coming from a depressed level. So we had a lot of tranquility. No one really envisioned additional trade tariff threats. But if we learned anything from 2025, that this is a tactical negotiation that President Trump is utilizing. And at the end of the day, I think this does die down. We're going to revert back to corporate earnings this week, which have been pretty sensational by and large. But we have to get through President Trump's about-to-be interview, the tomorrow interview with Joe Kernan, and also his address. So I think there's a lot for us to digest. But the VIX at 19 is telling me that this is going to be short-lived.
What do you think or see when you look at bond yields?
I think at bond yields, it's fascinating. Everyone is a bond expert today. Ask anyone, Kelly. They're a 10-year expert, despite the fact I actually spent about a decade trading the 10-year futures in the Chicago board pits. But what you're seeing with the 10-year, yes, it's elevated, but it's only up 7 or 8 basis points. So it's not time to freak out. We're not seeing people sell. I know the Danish pension was talking about selling $100 million. I think that's what Indiana football spent on their payroll to win the national championship. So not a big amount of money. But what I am seeing is that the two-year hasn't moved. And that's where the Fed rate is tied to. So I think we get through this emotion. And what did we see last year, Kelly? In April, we saw all the emotion. The volatility was sensational. And it was obviously a very nervous time, but it was an opportunity to buy. And here we are with the S&P 500, 42% higher from that 4802 low, where every analyst reconfigured their price target for the S&P 500. Yes, we're 2% off all-time highs in the S&P 500. We have to get through this digestion of additional trade tariff threats, but I think it's just a tactic to negotiate. I don't actually understand what the tactic is to own Greenland or not own Greenland, but that's not my business. My business is the markets.
Right, and you're saying the market to you'd be a buyer here of what's going on, volatility of the S&P. I mean, let me ask you about Bitcoin, which is nowhere to be found.
Yes, and I think that's the correlation that everyone's looking for, the safe haven. What is the safe haven, Kelly? It's gold, it's silver, and we're seeing just a sensational move, a continued, persistent move in both the precious metals. And yes, there's supply issues in silver, but to see silver above 95 and gold at 47.50, that is really reverberating around the globe that people, when they do get nervous, and this has been a nervousness, I would say ever since President Trump's administration began last January, people want tangible. Nothing feels, smells, and touches as good as gold and silver in times of distress.
We talk a lot about central banks and what they're doing and how that's a driver here, but hedge funds are a huge driver as well. We heard it from Citi's head of commodities on this show last week. He said since last year, it's also been a big financial trade. It gets really credit. And then Bank of America's fund manager survey comes out, Jeff, and has gold is like the most owned asset. We always know you fade, their findings. They often tend to be signs of a near-term top in sentiment. But it's been a losing bet to bet against this metals trade. So I don't know what you do with that information.
No, you're absolutely right. But I think we're in a super cycle. And I think what's fascinating is that we're seeing the administration trying to rebalance and reconfigure all those trade deals going back decades and decades on both sides of the aisle. So here, precious metals are being utilized and you're seeing allocations go up. It's interesting. For the Essential 40, my ETF that I manage, we just put in Newmont Mining. Newmont Mining has had a sensational year, up over 200%. We still want to own it here, Kelly. And the reason we own it here is because we see additional hoarding of central banks. We also uncertainty when you talk about what is the next Federal Reserve appointee. There's so many moving parts and inputs, and that's why I think you're going to see silver go up to 125, and I think gold is going to knock on $5,000 in 2 shakes of a lamb's tail.
So what about your favorite defense trade? Again, a great call there the last time we spoke a few weeks back. It's taking a breather today. Some think there's more existential issues if the European customers walk away. Does it make you rethink it?
No, it doesn't. I mean, Lockheed Martin has been the heart and soul, another essential 40, another essential holding. But I think when you talk about defense and the geopolitical tension that seems to continue to escalate in 2026, I think that's where it makes a ton of sense owning that. But there's also a big blue chip rotation that you're seeing. Obviously, the Mag 7 struggling, the internal Mag 7 rotation. But look at some of the names that we talk about a lot. If it's CVS, if it's some of these blue chip boring names. But lastly, look at Intel. There is specific highlights inside of technology that's not being just broad swath sold. Intel knocking on 50. That was a price target. I think you actually laughed when I talked about owning Intel last year when it was trading $20, $21. And it's going to 50, Kelly, and I got a chuckle out of you. But here we are. So I think you have to be very selective, and it's a stock picker's market.